Today's date, 7/8/2012. Good afternoon, MMTs. We're 2 minutes away. It's 11:58. We're going into a major calendar earnings starting Monday, 7/9/2012. This is the NASDAQ Composite. And what I'm going to show the MMTs here is that this particular rally that we got off the bottoms, and here's where our bottoms were. Now, here's where we call the top. Price diminishing, we got net short. It broke the trend line, as we know, on this weekly chart. We rallied up. We've had everything from QE3, you name it, under the sun worldwide. Central bankers, slowdown, Chinese, you name it. Iran, you name it. Slower growth across the board. This is not the right time of year in this particular quarter of earnings in the heavy related tech sector, and mainly traded on the NASDAQ Composite here. We have a 10-week moving average that continues to fall, even though that we've had this right up here to the top of this resistance level. And this is where the reversal, you're back below the 20-week. The 10-week continues to fall. The thing that we're going to be monitoring in the short term is, do we close below the blue line? It's declining. That means that this resistance is going to be stronger than strong, and that the calendar part of the year, the seasonality of the year for tech, such as semis, such as some software related names, across the board internet names, they have a slowdown. There is a weakness. Some had guided quarters down currently prior to this earnings. Some will be priced in the short term. Some are overvalued. I will tell you, though, that the weekly chart on the NASDAQ Composite is more bearish than negative. And that if we come down and test a 50-week moving average, what number is that going to be in the shorter term? That's going to be 27.56 on the NASDAQ Composite, right down here where that low was tested. I can tell you, though, if we keep declining in the 10-week, we will see that. If the MACD deteriorates and we have enough selling during the earnings season, this whole NASDAQ Composite can break these calendar lows. This is where they came in 2012. They gapped it up right here. They ran it. Well, I haven't seen anything like that since 1987. Parabolically up, which was great for the bull, but parabolically down to where it got that support level, and now at the major wall of resistance. And this whole last counter rally with everything going on around the world, this is at big risk. If you're in, I would sell now, get out of the way, let the companies report their earnings, cherry pick the good ones, wait for Ben Bernanke to come in with QE3 in August, let them sell the market down, let them mark their earnings down, let them price the market where it should be relative to yearly calendar seasonality growth, with nothing but policies in our worldwide banking system. They don't even have enough money to put in there, but they're going to put enough in to try to do what? Any rally with QE3, any more austerity injections, yes, you'll rally up to resistance. Yes, you will fail and get net short.